Hello everyone. So today we are going to solve two questions from our new chapter. And the title of this chapter is Differential Cost and Revenue, or we can say Differential Cost and Benefit. So it is important to understand some keywords for this chapter. For example, every decision involves a choice between at least two alternatives. So if you want to make a decision, you must have at least two alternatives, right? So if you don't have any alternatives, then you cannot make a decision. So for every decision involved a choice between at least two alternatives. And when we find two alternatives, we are going to find out whether there is any difference between these two alternatives or not. Because if you do not have any difference between two alternatives, it is very difficult to make a decision. For example, you and me don't have any difference. If we don't have any difference, then no one can select who is the best, right? But if you and me have some difference, then some other people can make a decision that yes, there is a difference, who is best and who is not best. So therefore, we are looking for some keyword like relevant cost, means that a cost that differs between alternatives. That means we have two alternatives, and in case of the cost, there is a difference. And another keyword of relevant cost is called avoidable cost. So when you will read the question, you have to find out this kind of keywords. Relevant cost means we have two alternatives, and two alternatives have different cost, and avoidable cost also the same. There is a difference between cost of two alternatives. What about the relevant benefit? It is opposite. So relevant benefits means the benefit that differs, again, that differs between alternatives, and it is also called avoidable benefit. So these are the keywords. That is very, very important for this topic. Okay, to make a decision, there should be a difference between two alternatives. And how can we make sure that there is a difference? The keywords are relevant cost or relevant benefit, or avoidable cost and avoidable benefit. This means that there is a difference between two alternatives in terms of cost and benefit. But if it is irrelevant or unavoidable, together, if it is irrelevant cost and irrelevant benefit, or unavoidable cost and unavoidable benefit, if this is the case, it means that there is no difference between these two alternatives. Okay, there is no difference between two alternatives. In this situation, it is called relevant cost and benefit or unavoidable cost and benefit. Now look at this example. We have two employees. We are going to select one employee for our company, for example. So we have these two employees, and this is their characteristics. First, we find that both employees, that means employee 1 has 4-year BBA degree, and employee 2 also has 4-year BBA degree, right? So now we have to find out this kind of terminology. So is there any difference between these two alternatives? Don't differ, right? They don't differ. Don't differ means they do not have any difference. If they don't have any difference, okay, which one is the keyword? Keyword is called relevant. Okay. Don't differ is called irrelevant. And what is the another keyword for irrelevant? Unavoidable. So I already told you that these are very, very important keywords for this chapter. So if there is no difference, between this alternative, it is called irrelevant and it is unavoidable. What about another characteristics? Employee 1 has CPA certificate. Employee 2 also has CPA certificate, right? So what does it mean? It means that they don't have any difference. They don't have any difference between these two alternatives. So it is irrelevant and unavoidable. Clear? Then the last one, employee 1 has 0-year experience, that means no experience, and employee 2 has 2 years experience. So what is the meaning? It is also do not difference or differ? Differ. They have a difference. And if it is difference, then the term is called relevant. The term is called relevant, and another terminology or keyword is called avoidable. Another terminology called is avoidable. So now what is the summary here? Summary here is we have two alternatives and we find that two alternatives have some difference, but in some cases they don't have any differences. Now when we make a decision, which alternatives we are going to select? This is the time as a manager we have to select which alternative is best for our company. Okay, and how to make a decision? The formula is eliminate. Step 1, eliminate or delete the cost and benefits that do not have any difference between two alternatives. Do you understand? We are going to eliminate cost and benefits that do not have any difference between these two alternatives. So from this point, which one we are going to eliminate? These two items we are going to eliminate. These two items we are going to eliminate. I eliminate them or I delete them. I delete them. Now we have one items and these items have a difference. So step 2, use the remaining cost and benefits. Using the remaining cost and benefits that differ between alternatives. And we are going to make a decision. We are going to make a decision. I repeat again, you can see here how to make a decision. We are going to eliminate cost and benefits that do not have any difference. I already told you that you and me, if we do not have any difference, no one can select us. So I delete them. Now we have one items. There is a difference. What is the difference? Employee 1 has 0-year experience. Employee 2 has 2 years experience. Now you can make a decision which one you need. Okay. If you need no experience and if you want to pay less money, less salary, then you can select alternative A or first employee. If you want one experienced people and want to pay more money, then you can select the second one because he has experience. Now you can make a decision, right? Now you can make a decision because there is a difference. This concept Up to here are very, very important concepts. And this concept we are going to apply in this chapter for every questions. Okay, for every questions, we are going to apply this concept. We are going to find out two alternatives that don't have any difference. If don't have any difference, delete them. If there is any difference, keep it and compare it. Who is the best for your choice? Now look at this question. This question said that they have several products in this company. In this company, they have several products, and digital watch. Digital watch is one of the products of this company. But the problem is digital watch is showing net loss for several years, for example, for several years. I repeat again, the summary of this question is this company have several products. Digital watch is one of the segment of this company, but the problem is this company is showing loss for several years, and this is their loss. And how to calculate this loss? You already learned this. Sales minus variable cost equal contribution margin. You know that, right? Sales minus variable cost equal contribution margin minus fixed cost equal net operating income or loss, right? So this company incur a loss. Now the question is, as they incur a loss for several years, whether they will continue to produce digital watch or they are going to stop it. So they have two alternatives at this moment. They have two alternatives. These are the alternatives. First alternative said that they want to keep the digital watch, they want to keep it. Or they have another alternative that they can drop it. They can drop it. So two alternatives they have. Now we have to read the question and we have to find out which alternatives have some common cost and benefit and which items do not have any common cost and benefit. Like here, we are going to prepare a table like this, that we have difference and we have no difference. Okay, if we have no difference, we have to eliminate them. We are only going to keep them if there is a difference between these two alternatives. So I think you understand two alternatives, right? We are going to keep it or we are going to drop it. Now look at the first one. If you keep, it means that you are going to sell your product, right? You are going to sell your product. So if you sell your product, you have a revenue. You have a revenue, $500,000. Why you have this revenue? Because you want to keep it. If you don't keep it, then do you have any revenue? No, you don't have any revenue because you want to drop it. You don't have any digital watch. If you don't have any digital watch, you cannot sell it, you cannot have a revenue. So if you keep, you have revenue. If you don't keep it, you don't have revenue. So there is a difference, right? There is a difference. If two numbers are similar, then there is a difference. There is no difference. Now we have sales. Now these are the variable cost. So if you produce the product, then you have this variable cost, right? If you drop it, you no need manufacturing expense, you no need shipping, you no need commission because you already drop it. So these three items, if you keep them, then you have these three. You have these three. But if you drop them, you don't have this information. Now sales minus variable cost equal contribution margin. So if you keep digital watch, you have contribution margin. If you don't keep it, you don't have any contribution margin. So we find that if we analyze the contribution margin, if we analyze the contribution margin, we find that if we keep our digital watch, then we have contribution margin. If we drop our digital watch, we don't have any contribution margin. Now, contribution margin minus fixed expenses. And for fixed expenses, you have to read the question very carefully to find out the keywords. For difference and do not have any difference. Look at the first part. This is additional information. An investigation has revealed that the fixed general factory overhead, this one, fixed general factory overhead and fixed general administrative expense, this one, fixed general administrative expense, will not be affected. Keyword. Okay, important keyword. Will not be affected by dropping the digital watch line. What does it mean up to here? What does it mean? An investigation said that fixed general factory overhead and fixed general admin expense will not be affected. What is the meaning of will not be affected? Differ or don't differ? Don't differ. Don't differ. That means there is no difference if you keep it or drop it. If you keep the digital watch line or if you drop the watch line, these two items do not have any difference. Okay, you have to continue this cost whether you keep it or not. That means that this $60,000, do not have any difference. Means whether you keep it or drop it, this is common. Okay, they say that another item we have the same. General admin expense. $30,000. Okay, it is also same. We keep it or drop it, will not be affected. So this is the keyword, will not be affected. It means that the alternative do not have any difference. Now we have another more information here. You can see that we have more information. Another information said that the equipment used to manufacture digital watches has no resale value or no alternative use. What is the meaning? Meaning is that you are producing digital watch, right? You are producing digital watch. How you produce it? You already have a machine. Okay, you already have a machine. And you use this machine to produce the product. Now, if you drop it, what you will do with your machine? For example, you don't want to produce the product. That means the machine is useless. Question said that the equipment used to manufacturing this product has no resale value, and has no alternative to use. That means don't differ. Why don't differ? Because you produce the product or you do not produce the product. You already purchased this machine previously, right? Previously you purchased this machine and this machine do not have any value if you do not continue it. Okay, if you do not continue it, it does not have any value. So no resale value or no alternative use. That means depreciation. It completely become the depreciation. So this $50,000, depreciation of equipment, okay, we cannot use this amount anymore because there is no resale value. There is no resale value of this equipment, whether we keep it or whether we drop it, there is no difference. I repeat here again. The equipment used manufacturing digital product has no resale value or no alternative use. You drop the product line, for example. What you will do with your machine? Can you sell it and get some money? No. Can you use it for another product? No, right? So it means that this cost do not have any difference whether you keep it or drop it. It is already happened in previous. Now, what about others? As other do not have any information in this question, it means that if you keep the product, for example, you want to keep the product, then you have to pay the salary of the manager. Do you understand? You want to keep your product, you want to produce the product. If you produce the product, you have to pay the salary, right? If you produce the product, produce the product, and if you want to sell it, then if you want to sell it, you need advertising cost. You need advertising cost. But if you drop it, you no need any advertising cost. If you drop it, you no need to pay salary. You drop it, right? You drop it means no people work with you. If no people work with you, you no need to pay any salary. Clear? But if you produce, you have to pay salary. If you produce, you have to pay the advertising cost. If you don't produce, you don't have any product, you don't need to provide advertisement, right? So it is zero. If you produce the product, you need a factory, right? If you produce the product, you need a factory, and factory have some rent. So if you produce the product per month, you have to pay factory rent. If you do not produce the product, you no need to pay any rent. You no need to pay any rent. So according to this question, 100%, 100% of general factory overhead, 100% of depreciation, and 100% of general admin overhead. They don't have any difference. Look at here. They don't have any difference. Do you understand? 100%, they don't have any difference. Clear? Okay, so I keep this, copy this, and paste here. So now we find that some here, this is this part. If I create a new cell here, so this item said that don't differ. Don't differ, right? So if we have any item difference, we are going to keep it. If we have any no difference, we are going to drop it, right? Now look at this clearly. I am going to delete this. Which part I am going to delete? If there is no difference, right? If there is no difference, I delete it. Now we keep the information that there is a difference. So look, this number and this number are not similar, right? These numbers and this number are not similar. As they are not similar, it means that there is a difference. Now you are going to make a decision. you are going to make a decision whether you will keep it or drop it, because we find a difference. And the formula here is, if CM is greater than avoidable, can you remember I told you that if there is any difference, it is called avoidable. Can you remember here? If there is any difference, okay? If there is any difference, what is another keyword? Keyword is avoidable, right? Avoidable. So the formula is, if CM, contribution margin, is greater than the avoidable fixed cost, we are going to keep. We are going to keep. And another formula is opposite. If CM is lower than avoidable cost, then we are going to drop it. This is the decision-making criteria. This is the decision-making criteria. Now, based on this information, make a decision whether you will keep it or drop it. We already know the contribution margin, right? We already know the contribution margin is $300,000. Now, what is the avoidable fixed cost? It is higher or lower? How much is the avoidable fixed cost? Total avoidable fixed cost. Total avoidable fixed cost is $260,000 here. So if we compare these two, our avoidable fixed cost is $260,000 and our contribution margin is $300,000. So if contribution margin is higher than the fixed cost, it is a good news. You know that, right? You know that contribution margin is higher than the fixed cost. It means that you can have $40,000 more contribution margin. So here $40,000 is more contribution margin. So you will keep it or drop it based on this information. So higher CM. Higher CM means you can earn this profit, right? Do you understand? If CM is higher than the fixed cost, this is your profit. Now, if you keep it, okay, you will have $40,000 profit. So because contribution margin is higher and avoidable fixed cost is lower. So which one is our decision? Our decision is we are going to keep the product line. Okay. Now you can see that I can change the same question. I can prepare a same question for you. You copy the main question. I can tell you that one half of fixed general factory overhead and one half just I add one half. One half means 50%, right? One half means 50%. 50% of fixed general factory overhead and 50% of fixed general and admin overhead will not be affected. Will not be affected. If this is the case, this is the solution. If this is your new question, the solution is here. Previous question said that 100% will not be affected, right? Now look at the new question. Look at the solution of new question. 50%. 50% means $30,000, right? $30,000. $30,000. $30,000 don't differ. $30,000 don't differ, right? And another $30,000 is like this. Differ. Previous questions was 100% don't differ, right? Now new question said that 50% differ, 50% don't differ. Same here, 50%, 50% differ, don't differ. 50% don't differ, that means $25,000. Sorry, not this one. According to this question. Not this one. This is 100%. 100% don't differ, but here 50% don't differ. 50% don't differ. So $15,000. $15,000 don't differ. Another $50,000. Another $50,000 differ. Look at the question again. Question said that 50% general factory overhead and 50% general admin overhead will not be affected, right? So 50% will not be affected, but another 50% will be affected. Clear? Another 50% will be affected. So this is the solution. This is the solution before make a decision. This is your workings. This is your workings. So we find that 50% don't be affected. 50% don't be affected, but depreciation expense 100% because I did not change here in the depreciation expense. I changed only first part, right? And I said here the depreciation do not have any resale, machine do not have any resale value or alternative use. That means 100% differ. 100% don't differ. Now this is the new. Now which, if I copy this is your workings first, right? This is your workings. Now I paste here. Now which one I am going to delete? If don't differ, I'm going to delete it, right? So 50% don't differ, I delete this 50%. Here another 50% don't differ, I delete this, another 50%. Here 100% don't differ, I delete this. Now we have something. Yes, we have something. This one 0, right? Yes. This one 0. Thank you very much. Yes. Yes, thank you very much. It should be 0. So now we find that there is a difference, right? Because all are 0. All are 0 and here there is a number. Now again, what is our formula? Our formula is we are going to compare this. We are going to compare this, which one is higher and which one is lower. So we know that contribution margin is $300,000. Now what is our available fixed cost? We can count it. $3 or $5,000, right? So it is $3 or $5,000. Now we'll keep it or drop it. Our contribution margin is lower, but available fixed cost is higher. We'll keep it or drop it. We'll drop it. So this is the decision. Okay, this is the decision. So do you understand the difference between first question and second question? First question said that 100% don't differ, right? I just changed it. Okay, now we are going to apply the same questions, same concept. We are going to apply the same concept to make another type of decision, like whether we'll make the product or whether we'll buy the product. So look at here. If you produce product, your unit cost is $30. So SS company manufactured part 4A. So this is the product they're producing currently. Making means you produce the product, make the product. Or you have another option, no need to produce the product, buy the product. So SS company manufactured part 4A is one of its product, and following is the product cost. So if you want to produce this product, your direct material per unit $9, your direct labor per unit $5, manufacturing overhead $1, depreciation expense $3, supervisor salary $2, and general factory overhead $10. Okay, so this is the cost if you produce one product, and the total cost is $30. Do you understand? So if you produce one unit, your cost is $30. Now, outside supplier, another people told you that why you are making this product, the cost is $30. You can buy it from me. You can buy it from me, the same product, same quality, 100% same. Okay, as it is 100% materials good like your product, everything is 100% quality. So if you buy it from me, I can give you per unit $25, but the condition is you have to buy 20,000 units. So if you buy 20,000 units from me, then I am going to give you per unit $25. Now you are the manager. You find that if you produce per unit cost is $30, but if you buy the same from the market, same, I told you that 100% same, you can get this product by paying only $25. Now, whether you will make this product or whether you will buy this product, but don't make it decision very quickly, because you have to consider some other factors, right? You have to consider some other factors. So after considering other factors, you are going to make a decision whether you will make it or whether you will buy. Now look at this question. We have two alternatives. We can make or we can buy. Now what are the additional information? The special equipment used to manufacture this product has no resale value. Do you understand? No resale value means your depreciation expense for equipment don't differ. Don't . don't differ. Why don't differ? Because there is no resale value, because you already have a machine, right? You already have a machine, you use it or not. Use it means you make the product. You do not use it means you buy the product from other people. But what you will do with this machine? This machine do not have any resale value. You cannot use it for any alternative purpose. So there is no difference. There is no difference with this machine if you buy the product or if you make the product. It is useless. Okay. So we find a keyword for this topic. That means depreciation do not have any resale value. So it is don't differ, you make it or buy it. One half again, it is 50%. 50% amount of general factory overhead. Okay. 50% amount of general factory overhead would be unaffected. What is the meaning of would be unaffected? Differ or don't differ? Don't differ. Yes, very good. So you find that 50% of general factory overhead don't differ. Don't differ whether you make it or whether you buy it. And your $30 units cost if you produce 20,000 units. Okay. If you produce 20,000 units, then per unit is $30, right? Now we can see it. If you make the product, how many units you have to produce? You have to produce 20,000 units, right? And what is the direct material cost? Direct material cost is $9. Direct material cost is $9. So it means that if you make the product, then you need direct material. How much direct material you need? $180,000 direct material you need. If you buy this product, do you need this material? No, right? Because we know we are buying the finished product. So we don't need to buy raw material. If you make the product, you have to pay salary to the direct labor, right? For 20,000 product, per unit salary is $5. So you have to pay $100,000 salary if you make it. If you buy it, you don't need to pay any salary, right? Then manufacturing overhead, like indirect materials, indirect labor, factory cost. So if you make, you have this cost. You have this cost, $20,000. If you buy it, you don't have this cost, right? You don't have this cost. So depreciation, the full amount of depreciation has no resale value, right? No resale value. So this is $60,000. Do not have any difference. You make it or buy it. You already have an equipment, right? And this equipment do not have any alternative use, no resale value. So you make it or buy it, the cost is similar. Now supervisor salary, if you make, then you have to pay the salary to the supervisor. And how much? It is $40,000. If you buy it, you don't need to pay any salary to anyone, right? Now general factory overhead, according to this question, 50% would be unaffected, right? Would be unaffected means don't differ. So what is the 50% here? 50% is 100,000. 100,000 don't differ. The question said that one half of general factory overhead don't differ. That means another half, another 50%. Another 50%, 100,000 is differ. Do you understand? And what is the last one? If you buy it from outsider, how much you have to pay? You have to pay $500,000. You have to pay $500,000. If you make it, then it is zero, right? This is zero because if you buy it, you no need to make. If you no need to make, it is zero, right? Something like this. Now we find that who are the reference? Zero means difference. So we find that two items don't differ. Two items don't differ, but another part of the differ. Now, when we make a decision, you remember from the very beginning, I told you that when we make a decision, we eliminate which part if there is no difference, right? If there is no difference. So let me delete this. So I'm going to delete this. Now make a count. So if you buy, your total cost is $500,000. If you buy it, right? And if you make it, how much it is? $440,000. Right? 440,000. So if you make, your cost is $440,000, but you buy it, your cost is actually higher, right? Now, which decision you are going to follow? Make, yes, something like this. So this is the main concepts for this chapter actually, for this chapter.